So, along with ideas like CAPM, which lack empirical support, Ricardo's comparative advantage is gospel in universities, academia, where which support these ideas of free trade. Now, I know it's been expanded by people like Bhagwati. They have sort of worked and made it, added some features to it. But here's the thing: the idea that free trade is good for a country's economy is absolutely persistent. Now, this needs examination because this idea has had a tremendous impact. So, it has actually created a lot of misery for large sections of the population. What is obvious from, if you do like Ricardo's, if you follow Ricardo's idea, okay, GDP should increase, the production frontier of the world should expand outwards. However, what that argument entirely ignores is what happens to the distribution inside a country. Now, a country should follow economic policies which take into consideration the welfare of all of its citizens, not just certain sections of it, right? If you don't have that and you have growing inequality, then it's finally going to fail. The country is going to fail. Also, what we observe is that what we observe is that nowhere in Ricardo's theory does it suggest that inequality should increase with free trade. Nor does it suggest that a country would keep piling up on foreign debt. So Ricardo's theory does not actually, and it's like, it's supposed to have like these benefits of comparative advantage and etc., like expanding the production frontier outwards. But what you see in reality is that you see an persistent trade deficit, growing inequality, and a persistent growth. I mean, with a persistent trade deficit comes a persistent growth in foreign debt. Now, so what about this foreign debt? At some point, future taxpayers will have to repay this debt. Now, this debt is essentially enabling greater consumption today. And if you are like really free, if you really believe in utility functions and that's the be all and end all, yes, then greater consumption today is supposed to be good. However, if you really have a scientific view of the human nature, which is then another part of my video, then you realize that humans get a reward, which is what they seek, for a variety of things, for a portfolio of things. They get love. They don't just get it for greater consumption. They get it for relationships. They get it for a feeling of security. They get it for a feeling that they have done their duty, and so on. Okay. Now, this thing that, okay, we are going to kind of keep piling on debt because it's enabling us to have greater consumption is totally wrong, because at some point in the future, the taxpayers will have to repay this debt. And this debt is being used to finance greater current consumption. And this debt can have like unpleasant long-term consequences like high inflation, to reduce the real value of debt, like whatever debt you gave to foreigners. I mean, let's have hyperinflation, make that debt worthless. That's not a good strategy. Okay, and or you could end up selling your productive assets to foreigners. Foreign debt may be justified if it is used for positive net present value investments that will increase a nation's productive capacity by an amount sufficient to pay back the entire foreign debt. Trade deficits for investment purposes are okay, but they should be avoided for greater current consumption. It's all there in this book, and I actually have discussed all these issues. And of course, you have the book QR code right there. Now, effective action against trade deficits is lacking. There are actually powerful lobbies which want these trade deficits to persist. So a country is not homogeneous. There in a country like the US, which is running trade deficits, persistent trade deficits, there are people who actually benefit from it. Okay? And now, who are the people who benefit from it? Well, this growing foreign debt, which the US, growing amount of debt which US sells to foreigners, what does it do? It keeps the US dollar strong. Keeping the US dollar strong means that foreign labor is more competitive, and it's a competitive disadvantage for American labor when the dollar is strong. What else do we see during this time when we have all these free trade agreements? It started like, let's say, sometime around the 1980s when countries in East Asia, the US was importing more and more from them, and then increased further with NAFTA, the WTO, and then the latest attempt was the Trans-Pacific Pact, which failed. So this growing debt allows the dollar to remain strong, and sometime in the future it may finally collapse, but in the meantime it remains strong, and that works against the US worker because it puts the US worker at a disadvantage compared to foreign workers when it comes to foreign companies. Firms would rather manufacture in foreign companies because the labor costs would be lower because of the stronger dollar. So, okay, so does that mean we should not trade? No. There is value in trading. Besides, of course, there are economic benefits, and there are also things like the world should interact with each other. There should be more for the sake of harmony. And however, what you should do is you should have balanced trade. You should not have free trade. I mean, this whole thing of running persistent trade deficits and financing it by issuing debt is just bad. It's unfair to domestic workers, and it'll have serious negative consequences in the future. What you can do is you can have balanced trade. Now, what is balanced trade? Well, balanced trade, you impose tariffs till your trade deficit disappears. Now, would a foreign country retaliate against tariffs? If they're sensible, they should not, because if they're running a trade surplus and then they put tariffs on American goods, then the trade surplus will not be reduced because their purchases of American goods would fall. So it is best for the foreign country to understand that this persistent surplus which they have with respect to the US is not a good thing, and they should accept tariffs which the US may impose till the trade deficit goes away. And actually, it should not really be the calculation should not be like who the US has a trade deficit of surplus with. It should rather be whether these foreign countries themselves have trade deficits of surplus, because they're like countries. India does not have it's almost balanced, right? It runs a surplus against the US, but it also has to pay a lot to buy oil. So overall, India is not really running a trade surplus. So the countries which should either increase their purchases of American goods or reduce their exports to the US should be the ones which are running large trade surpluses.